Today the market is totally crashing. Amazon minus 9%, Apple minus 9%, Google minus 3%. You have some serious opportunities right now on the market. For long-term investors, moments like this are really, really amazing because you can buy at very good price some very good stock at a very good discount. So in this video, I'm going to do a tier list of my favorite stock to buy right now, the ones that I'm looking to have maybe a bit more discount before buying, and the ones that I will not buy even if there is a minus 50% drop on those ones. So the higher it is on the rank, so what will be on S are the stocks that I believe that they are very good opportunities, are bargains to buy right now. Okay, very good opportunity now. On A, I will say that they are fairly valued, a bit undervalued, so they're still good to buy right now, but the one in S will be better. In B, they're fairly valued. Okay, it's like you can buy now, you can wait a bit, it's fine. On C, I would like them to be more, I really like them, but I would like them to have a bigger discount. And D is like, don't touch this shit, okay? So we have plenty of one. We have Meta, Booking, PayPal, Microsoft, Amazon, Google, Apple, Nvidia, Novo Nordisk, Salesforce, ASML, Medpace, Lam Research, AutoZone. We'll rank all of this in this video. So if you guys have fun and if it helps you, just let me know in the comment. So first one, we'll start with Pfizer. Pfizer, I put it in D. The reason why I put Pfizer in D is because they have such a bad history. Like if you look at Pfizer history, is they doing great, then suddenly they stop doing good, then they do good again. It's like look for example at the revenue. Revenue flat, 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 then you have a vaccine up, then down again, flat, flat, flat. It's always flat, it's not really interesting. If you look at the net income, it's kind of the same, it's up, down, up, down, up, down. So I don't like this. I don't like company with this kind of numbers. If you look at some ratio, for example, the financial health, you can say that the net debt to EBITDA is fine. Okay, it's not too big, so this it's fine. But for example, the margins, they are sometimes high, down, but they're still good. And where is it? The capital efficiency, the return on invested capital. Sometimes it's big, sometimes it's down. Like it's, you see, I don't like when it's up, down, up, down, up, down. So you may be on a point where the stock is cheap now. Yes, but the thing is I cannot hold it for 10 years and having a little growth every year on it. So that's why Pfizer, it's in D. Nvidia, I put it on D as well. It's a good stock, okay? It's way better than Pfizer. The reason I put it on D, it's same, I don't see myself holding this company for the next 10 years. I really don't see myself holding the company for 10 years. So even if it declined 50%, I will not buy it. Now, if you're a short-term investor, if you want to invest on something for the next 1, 2, 3 years, yeah, it can be interesting for Nvidia because if the price is really good and if you have a very fair value on it, you can make something. The only problem I have is I'm not convinced about the moat. I'm not convinced that it's a strong enough moat to protect the business for the next 10 to 20 years. I really believe that they could be overtaken by any other company. So not any other company, but by, I don't know, if Amazon start doing their own chips for data center, then for AI, if you have another company like AMD or whatever doing their own chips, I will not really consider it, and I think they can be disrupted. That's why they're here, and I will put as well maybe AMD here on D. They are fairly valued, like it's undervalued, yes, but not enough value for me, not enough big moat to consider buying it one day. Then we have Apple. Apple, it's I put it in C right now because it's still a bit expensive. Start to be a price interesting, but I put it on C. The reason is that it start to be an old company. They don't manage to renew themselves. They don't manage to have a good AI product and so on. They have some difficulties with this. So I really start having the feeling that other company like Huawei, Xiaomi, even Google, they start to produce phones that can be better. Even Samsung, that like they're really getting better and better with their phones. So Apple is in C. The thing that is not in D is because I still believe that it's a great brand. They just need a bit of renewal. And if they got really cheap, like a bit like Warren Buffett bought it. I think he bought it for 12 PE in 2018, something like this. If it's down to a 12 PE or 10 PE, yeah, might be very interesting. But for now, it still needs to decline way more to be considered as an investment. Then I have Fortinet. Fortinet, I put it on B or C. The reason is between them is a great company, great numbers. Like if you look at Fortinet, they're in cybersecurity, so it's something where you need them, okay, you really need them. So great numbers, you have some growth for the years coming, okay, so this is great, great net income, great margins. This company is doing really, really well. The reason why it's not higher in my tier list is because I find it a bit expensive, okay? Now you have a PE of 42, the forward PE is 39. Like I would like it with a PE around 20, under 30. With a PE under 30, I will go in. So you need to have a bit more of a decline. Let's check because on FinChat it's not on time here, 40 of PE. So I need a bit more of decline to enter in this one, but it's still a great one. So I put it in B because I think you can have a good opportunity on it before Apple, but still it's a bit expensive. MasterCard, this one I put it on A, no, on B. On B, why? Because it's not undervalued. It's a value that seems pretty fair, like Fortinet. Fortinet is, if you like risk, is a fair value. MasterCard, for me now, it's a fair value in the sense that it's a stock that is always doing great. Like it's growing 12, 13, 14, 15% per year EPS. They're always straight. It's not like extremely volatile stock. So I like this. It's also a business that no matter what happens, people will continue to use their card. Like if you look at the share, like it's doing like calmly going up. It's not something that will do like 40% per year, but it's kind of a safe 15% per year. So at this price, it starts to be interesting. I would prefer to maybe to have under 35, 30 as a P. If you can have it at a P under 30, amazing. But don't really count on it. It may not happen. So yeah, MasterCard for now, it's a price which is interesting. AutoZone, this one I put it on C. I put it on C because same, great business, and I put AutoZone and O'Reilly in the same, okay, same basket. Why I really like them is because the company always do same, like in the sense that even when you have a market crack, like look, for example, just today, everything is falling. They are going up 0.97%, right? Everything is falling, okay? So it's a company that really do well. And when you have the market that is declining, they decline a little, but up. For example, in 2017, they had a big decline, but then went up. Every time the decline is extremely low as well. And when they decline, the management is buying stocks. Management is buying back the shares. So then it rebound kind of fast. Like in 2020, you had a very fast one, and then up, it's going up all the time. So that's why I like this one. The PE ratio is 25. This one with a PE ratio on 20 approximately, I think it could be interesting. So for now, I feel it's a bit overvalued. Like it's not too much overvalued, a little bit, but can be a great business that I would like to buy as soon as it gives something good. MSCI, I put it here as well, B, because even C, because it's a bit expensive. MSCI, it's a bit expensive. I think you know the index MSCI World. Like it's a great business, but P ratio of 40, it's a bit too much for me. But this one can be very interesting. I put it here because it's a great business again, great business model, great margins, great returns. It's just now it's a bit expensive. S&P Global, I put it with MSCI. By the way, you have a full analysis on my YouTube channel about MSCI, so go check it out. It's same. Here it's a bit expensive. If we have a market decline of 30, 40, 50% and those two decline, I will probably buy S&P Global instead of MSCI. I prefer S&P Global because they are more wide in terms of business. They have more things, but those two are really good. Salesforce, I put it on rank A because they are undervalued now. I believe they are undervalued. They are great. The only problem with Salesforce is the stock-based compensation. The stock-based compensation are way too high. They are really, really high, but they have great product. I think they have a great moat. So for now, they are a bit undervalued. They could enter in S pretty soon, but for now, I put it on A, which is already very good. Novo Nordisk, I put them on A or S. They are undervalued, it's undeniable. Yeah, I will put them on S because they are really undervalued. It's like they're less undervalued than some others that you will see now, but still they have a great business. They have extremely good margin. If you compare to the competitors, their margin are higher. Their return on invested capital are higher. Like they are really, really good. Yes, you have some competition on obesity market, but it's such a big market that it's fine to have competition. Everybody will have a piece of this market, and Novo Nordisk can have a great piece in it. So same, I did a full analysis on this on Novo Nordisk. I did a full one on Salesforce, so you can find them on the channel. Tesla, I put it on D because it's way too overvalued, and like even now, it's still a PE of what? If we check Tesla, what is the PE ratio? Like the PE is still 131, and the forward PE 102, 103. So yeah, Tesla, it's way too expensive for me. So no, it's in D. Plus, I'm not a big fan of investing in a cars company, okay? So yes, okay, Tesla is a tech company, it's way more than cars. There is a robot, blah, 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 robot taxi, whatever you want. But yet, I'm not a big fan, it's not high margin enough. It can be a great company, but not for me. It's not for me. For some people, it can be great. For me, no. Uber, I put it in D because I don't see myself holding the company for the next 10 years. But, and there is a big but here, I start to believe that they have a moat which is interesting. I believe people think it's like, I think people overestimate a bit Uber moat, but I understand investing in it in a sense that, yeah, I understand the thesis. The thesis makes sense, but it's just not for me. It's just not for me. I just don't really like the thesis, but it makes sense. You're not totally stupid if you invest in Uber. Like, it can be a great company. It's a company that is growing correctly. I don't think they will be disrupted by robotaxi. I think people will order robotaxi from Uber app. So I don't think they will be disrupted, but I'm not comfortable buying it. And you need to make choice. Like I have only 10, 15 positions that I can have in my portfolio. So I will not start investing in every company that seems good. So Uber, I put it here, but for people that really love the thesis on Uber and believe that they will continue to do great, I can put them on A or yeah, on A. It seems to be a good opportunity. It's just for me, Uber, it's here. Booking.com, I put it here. In my opinion, it's undervalued. It's a great business. I love it. Like to be fair, like every time I book something, I go from Booking. If it's a rental car, if it's a hotel, I go by Booking. Okay, so I love this company. Now it's not like extremely undervalued. It's a good price. Like it's a good price to enter in the position. So I like it. I have it in my portfolio, and same, I did a full analysis on about it, so you can have it. PayPal, it's in D. Great value. It's undervalued, undeniable. It's undervalued. It's just I don't like the business. I don't like they have too much of a high fees. Like the only way they grow is by having higher fees. They don't have new user anymore since 3 or 4 years. I don't believe they have a moat. I even think the moat is declining for the company. So I don't like. Lam Research, I put it on A because I did also a full analysis, you can see. I put it on A because I think they are undervalued now. They are not extremely undervalued, but they're undervalued. It's a good opportunity to enter. So it can be a nice time to start entering in Lam Research if you believe the business is good. I really believe the business is good. And I may do a video about it to compare Lam Research and ASML. I prefer Lam Research than ASML. Like I picked Lam Research in my portfolio rather than ASML, even though ASML, it's a very, very good price as well. The reason here is because, in my opinion, ASML could be, I will not say disrupted, but a big part of, they could lose like 20 or 30% of their revenue if China managed to create their own EUV lithography machines. Some people think they have 10 to 20 years advance on it. If yes, so then it's a great buy. It's probably a S, okay, ranking S. But if it's not, it may be problematic. That's why I'm not comfortable. I don't see Lam Research getting disrupted like ASML could be, because ASML has a way more important part on the market. Okay, they are really They're really important in the semiconductor fabrication, while Lam, obviously they're still very important, but no reason, let's say, to come to disrupt Lam Research, while coming to disrupt ASML, we have countries and companies have big reason for this. So that's why I'm more comfortable holding Lam, but ASML, same. If you think they will not get disrupted, it's in S. If you think they have a chance to get disrupted, it's in D, okay? I will keep it on S because it's really a bargain at this price, and the probability that they will get disrupted are not that high, but if it happens, it can really put some problem in the business. So that's why I put it on S, and I prefer to go with Lam. Also, way less people are talking about Lam Research, while everybody is talking about ASML. Every value investors, I keep talking about ASML, ASML, ASML. So as well, I prefer go to companies that nobody talks about. Meta, I think they're undervalued. It's not S yet. I think they need to lose 20% more, and it will be in S. But it's a great company, great numbers. Like, it's really doing well, but I put it on A. It's undervalued, yes, but it's not S yet. Google, Alphabet, for me it's a S. Like, the company is really undervalued, under $180. It's a great company to have in your portfolio. They develop well in cloud. They have YouTube. They're doing good acquisition. Like, historically, they've done good acquisition. I think they can really have a good position on cloud. So yeah, I put Google on S. Amazon, same. It goes on S. It's undervalued. For me, under $220 Amazon, it's a great deal. So now it's, and today the company really dropped, like -7%. So under $220, it's a great deal. So now at 180, it's really, really, really good. So that's why Amazon and Google, they are here for me now. Right now, those two are excellent opportunity. Microsoft, I put it on A. I put it on A. I could put it on B because it starts to be undervalued. Same, it's a great business, okay? But I would like them to lose maybe 10% more, 10, 15% more to potentially start a position or something like this. So considering them, they're good. They could be in B. I will put them in A because it's not that often that you can have such a value for this company. It's a great business, growing like really well, very mature. They have good position in cloud. They have good moats, okay? So all the company here that are here, they all have good moat. For me, the only one, if they don't have a good moat, they're automatically in D. And last one, it's Medpace. Medpace, for me now, it's not overvalued. It's a value, kind of fair value. It's a company that do trials for pharmaceuticals. So they don't do any drugs or anything like this. It's just that when a pharma want to do a trial, they call Medpace, and Medpace have all the equipment, the expertise to help them doing this trial, to help them doing everything. So that's what I like about Medpace, is like they don't need to have a super nice drug to earn money. No, they just, as long as people want to do trial, company want to do trial with drugs and everything, they will go to Medpace. So I really like the business. I really like the fact that the CEO, the co-founder or the founder, still have some shares in the company. I think he still owns like 10 or 15%, so it's really good. But for now, it's a bit expensive. It's fair value, a bit expensive. If it loses like 15% or something like this, it will go on A. And if it loses 20% or more, it will go on S. So for now, it's here on B. But I guess soon will be on A or on S. So let me know in the comment section, what do you think about this? What are for you the best company to buy right now? Let me know in the comment section as well if you have some other companies that you would like to see in a tier list or something like this, or if you would like episode 2 of this, let me know and I will be happy to do it. So you kind of have my watch list for now. Everything which is over C is kind of in my watch list right now, and some of them are already in my portfolio.